Happy Friday afternoon, everybody. Uh, I feel like I just came back from the Ukraine and have been fighting a war all week. Uh, the bond market's been absolutely bloody, and the stock market's trying to duplicate that. And at the same time, the political noise is getting louder and louder, and it's all happened at once. So it's been a pressure cooker, and I guess kind of like combat in here. Anyway, we did learn some things. Chairman Powell raised the interest rates by 50 basis points. He had a rather conciliatory message about, we have to take some pain short term to get back to price stability, yada da da da. But he wasn't very threatening at all. And the market responded with an 800-point increase on the day of the announcement. And the bond market, little bit, but not much. It didn't take the bait. The next day, which was yesterday, people had a chance to read the minutes of the press release. I read everything I could. In fact, I read the transcript of his Q&A period with the press and was somewhat disappointed. And apparently others did the same thing because the market turned around and dropped 1,000 points the next day. So up 800, down 1,000, and today we ended, call it 100 points on the downside after being down 400. But the bond market is where the blood is. The long-term Treasury bond so far this year has dropped in price by 27%. That's a big decline. And today it's set a new low again. And I can't blame it because we don't know how rigid these interest rate increases are going to be. And the fact that Powell wants to make it last over a longer period of time. I mean, why he can tell us today that in June we'll probably get another hike of 75 basis points. What's magic about June? Why not raise it another 75 now so we can get things done with? But this delay, searching for a flexible interest rate, that language comes out of Ben Bernanke's book. Don't like that either. So there's some things in looking at this thing that are bothersome. And perhaps the most bothersome one is blaming the inflation all on Putin and the virus. That's it. It's COVID. Well, those things are aggravations. But he did not address and he did not take blame for the quantitative easing and for the suppression of interest rates. Remember, I talked about this on a tape a few weeks ago about keeping interest rates down to the zero interest rate level so that the price of money was too low. And that put us into a fantasy land, kind of a fairy tale situation. And there's no mention of that. So I'm not sure what this man has in his heart, and I'm not sure what he really understands or misunderstands. And apparently the market feels the same way because it's weak and the bonds hit a new low today. So we now have the 30-year Treasury at about 3.25%, and it was 1.5% several months ago. So interest rates have gone up. But they're not done yet because he's not done yet. Powell is talking about subsequent rate increases. He also is talking about bringing the balance sheet of the Fed down. And the Fed has become the banker for the U.S. government. What used to be an operating balance sheet of $600 billion is now approaching $10 trillion. And it's paper, it's mortgage-backed securities, and U.S. government bonds. And the excess reserves that we've also talked about in the system creates a structural problem. So now we've got to wait and see where the money comes from that he's trying to take out with this 50 basis point move. If the money does not come from that part of the monetary base that impacts inflation, it's a waste. If it comes out of excess reserves, that doesn't impact inflation. So this whole thing is a waste until we can see where the money comes from. But it will seep out, and we'll get the answers. And in the meantime, the bond market will be feeling for what it thinks is the ultimate low. And that's going to take a lot of patience. On the stock market, I have to tell you the Dow Jones Industrial Average has dropped about a little over 4,500 points. And it was here several months ago. And it hit a low of 32,270 and change, something like that. And it has had 4 subsequent attempts to penetrate that low, and the Dow has not. So we seem to be setting up a base in here that could be a platform for a rally off of that base. But we're probably not going to play, because when you look past that, the Standard & Poor's broke a similar low, and the NASDAQ has made a new low today. It just keeps going down. So I'm not sure that there are enough proponents yet to move a rally and make it become a permanent bottom. We're looking for permanency, so we're going to sit in the sidelines and discreetly watch this and stick with quality issues. We got some of the questions answered, not all of them. I really don't know what is in this man's heart or in his realm of understanding. Anyway, we'll find out. Have a good weekend. We fight the battle next week again.